To me, the simplest way to think about Bitcoin is that it's gaining traction as replacement for gold. I think that if someone wanted to understand the use case for Bitcoin, and there's many, but they're not too, they don't have a lot of conviction around something. To me, I can say easily it should supplant gold. And so I think Bitcoin should be, over 1 million over time. Should be good. I mean, so I think Bitcoin should really build upon this 120 before the end of the year. So, 200,000 maybe, 250.
The crypto market has roared back in 2025, and Bitcoin has emerged not just as a survivor of past crashes and regulatory battles, but as a dominant global asset. Now trading between $115,000 and $120,000, it's near all-time highs. But the bigger story is what's driving it: institutional demand, geopolitical instability, and a growing distrust in fiat currencies. Bitcoin is no longer just a hedge, it's becoming the cornerstone of the digital economy. One of the strongest voices on this shift is Tom Lee, former chief equities strategist at JP Morgan and co-founder of Fundstrat. Lee has consistently called Bitcoin's rise when Wall Street dismissed it, and today he argues it's not just mimicking gold, it's replacing it. In his view, Bitcoin is a digital reserve asset that could one day soar past $1 million. In the short term, Lee believes Bitcoin could reach $200,000 to $250,000 by year's end, fueled by institutional accumulation, reduced selling pressure, and a potential Fed rate cut cycle in September. And it's not just Bitcoin. Lee says Ethereum may be entering its own breakout decade. For him, this is just the beginning of a historic crypto super cycle.
We're constructive, and I think it is a good sign that many people are skeptical, because we believe this is one of the most hated V-shaped rallies, and we are making new highs. And instead of people justifying new highs, we have many people saying markets should not be here because the Fed is not cutting rates or there's tariff uncertainty. So that skepticism is healthy for markets.
Why is it healthy for markets?
Well, it's a sign that there's still price discovery underway. Because if people were all bullish, in the public realm, when everyone's bullish, then it's probably in the price. But when there's plenty of skepticisms and reasons to be skeptical, that allows markets to have positive surprise. And I think that's true of crypto. Bitcoin, is making all-time highs. It's kind of silent, right?
Bitcoin, you're predicting, I think, even higher prices by the end of the year. So why do you feel that way?
Well, for equities, it's really straightforward. Number one, the economy has proven to be incredibly resilient. I mean, I don't think people should take a half-empty take. We've thrown massive tariffs. We had essentially a Cuban Missile Crisis moment, and yet S&P earnings are going to grow 12% this quarter. And there's not any signs really of sustained or a reigniting of inflation. There might be some inflation temporary, but that's very different than inflation dynamic taking root. And the second is people says that deficits and this current budget are so bad that no one's going to buy our debt, but yields are behaving. 10-year yield was 5%. 2 years ago, it's 4.5% now. And in terms of multiples, I think people are getting this wrong. There's a lot of people saying the market's expensive because the PE of the market should be the average of 16 or 17. Now, I've been an equity analyst for 34 years, and I used to cover stocks. I was a tech analyst for 17 of those years. I never once found an analyst who made money saying you should trade at an average PE. Like literally you either have arguments for PE expanding, and then you just have to determine when you've hit bubble, or PEs contract when the story is getting worse and there's no bottom. And we just threw 6 extinction events at the S&P 500 in the last 5 years. COVID, then a bullwhip supply chain effect that normally should bankrupt businesses. We had the fastest surge in inflation in 2 generations, the fastest Fed hikes in history. We had tariff Armageddon. I mean, literally a Cuban Missile Crisis moment for the stock market this year. And then the US bombed Iran's nuclear facilities. Each of those should have caused a crash in the stock market. And yet the S&P recovered every time. If we were talking about this as a single stock, we'd say, look, if you threw 6 things at a company and it survived, it should have PE expansion. And yet most people think the market's expensive. To me, the most the simplest way to think about Bitcoin is that it's gaining traction as replacement for gold. I think that if someone wanted to understand the use case for Bitcoin, and there's many, but they're not too, they don't have a lot of conviction around something. To me, I can say easily it should supplant gold. And so I think Bitcoin should be, over 1 million over time. And then I kind of prescribing to the view that there's probably a chance that maybe the 4-year cycle is ending for Bitcoin because of the way institutional adoption of that thesis is taking place. And so you have institutional and essentially permanent holders of Bitcoin coming in. So it should be good. I mean, so I think Bitcoin should really build upon this 120 before the end of the year. So, 200,000, maybe 250. Well, you can't create a bubble because you're buying Bitcoin. So unless you think Bitcoin's a bubble, it's not a bubble, right? I think the crypto treasuries there's going to be winners and losers because there is a scarcity to it, actually. So Bitcoin is scarce. And so it's proper for companies to have Bitcoin on their balance sheet over time. And I think banks will, because banks, as Bitcoin really does get recognized in its proper place as how you move money in the financial system, then the banking sector will actually stake Bitcoin as well. They're going to want to own it, I mean. And so these treasuries are doing what other businesses will eventually do. But for them to get a premium to their Bitcoin because of how they're executing a strategy, that is the scarce part. MicroStrategy has already proven that their strategy works because they started on August 12th, 2020. They bought 260 million Bitcoin. Stock was $13. Now they own close to 5% of the Bitcoin network.
Yeah.
And they announced a huge buy last week, but the stock is 400. It's gone up 30 times. So that's truly executed in a masterful way. I don't know if the 50 other Bitcoin treasury companies I don't know how many are. I actually looked at that website.
BitcoinTreasuries.net.
Yeah. And there's like 50 companies. Not all of them are doing treasury strategies.
Right.
But I think a handful will emerge as winners, but not everyone.
Are you bullish on some over others? Like, can you name any?
Well, I would say, again, I don't necessarily want to recommend one or the other, except for one that's in our granny shots. But I'd say there's been differentiation, like there's a geographic differentiation. So in Japan, there aren't ETFs. So Metaplanet's been amazing, and in the UK, there's a handful of names.
Cyber criminals are getting smarter, and everyday investors are the new target. You worked hard for your crypto. Don't lose it to a scam. Recently, attackers bribed offshore agents at major crypto platforms, stealing names, birth dates, even social security numbers. They drained real accounts in seconds. No blockchain hack, just human error. Once it's gone in crypto, it's gone. That's why ITrust Capital created the Premium Custody Account, the most secure way to protect your asset. It's a closed-loop system, meaning funds can only move between you and your account. Even if someone gained access, they can't steal your crypto. Backed by institutional-grade custody at no extra cost. Sleep easy knowing your investments are locked down. Click the link, use code DOSE7, and get a $100 funding bonus. Start protecting your future with ITrust Capital.
And then there's one just emerged in Korea. So it is a geographically diverse thing. They have an opportunity to distinguish themselves. But because of like what I've seen in treasuries, there is a certain like alchemy that like MicroStrategy has, which is MicroStrategy has made MicroStrategy shareholders into customers. I mean, he has orange pilled every shareholder of MicroStrategy, and he has maintained a premium, and he has transformed capital markets. That is what needs to be done for these other treasuries to be successful, and not everyone probably has that combination.
Tom Lee predicts Bitcoin could surge to $200,000 to $250,000 by year's end, driven by institutional demand, tighter supply after the halving, and a wave of FOMO as corporations and funds add BTC to their reserve. He's not alone. Major firms like Standard Chartered and voices like Kathy would see similar six-figure potential. But Lee is also betting big on Ethereum. Through his firm BitMine, he argues ETH could be the larger macro trade of the decade, powered by tokenization, smart contracts, and stablecoins. With Wall Street quietly building on-chain infrastructure, Lee believes Ethereum is on track to become the backbone of the digital economy.
I don't see this as a conflict. It's the same reason why someone who says they like Tesla but they like Palantir, because they're both scarce stocks, right? Like there's one Tesla because there's only one Elon Musk in the world. And there's only one Palantir because while it's not completely clear exactly how Palantir transforms companies, you can see whether it's a hospital in Michigan or wherever, they are really providing superhuman powers to a business. So, you should own both. Bitcoin to me is a proven blockchain that in my mind is storing value. And it is, as like Michael Sayer says, it's immaculate. And I do think the simplest way to think of it is it's replacing gold. So at least let's get to 1 million and then we can see how much further Bitcoin goes. But the world is also grappling with the digitalization of everything that we do. And so we're storing information and we're tokenizing businesses and we're tokenizing the dollar. And stablecoins have become so important, in fact, from a policy perspective, because stablecoins are now actually big buyers of treasuries collectively. I mean, that's why you may say you don't have to worry about deficits because stablecoins will buy the debt. Well, that is the ChatGPT moment for crypto, because what's happened is that the first killer app for crypto has emerged that is now seeing widespread adoption, which is stablecoins. And now Wall Street is running to tokenize and maybe even financialize their entire system on the blockchain. But that means they require smart contracts. So they're not fighting with Bitcoin. Bitcoin paved the way for Wall Street to recognize that you don't have to have tangible assets to create value. But if you're going to tokenize what Wall Street does and you tokenize stocks and real estate, you need smart contracts. And the biggest and most secure blockchain with no downtime is Ethereum. And it's legally compliant. And the majority of stablecoins and real world assets that have been tokenized are taking place on Ethereum. So to me, that is the macro moment. So in 2017, when I first wrote about Bitcoin, I saw this as the time when Wall Street would eventually come to recognize Bitcoin's importance. So Bitcoin, of course, had already accomplished a lot because it reached 100 billion in network value. And that's why I wrote about it. It's like, if you don't believe in something that gets to 100 billion, like you got to pay attention to. And our thesis was that Wall Street would start to view this as just digital gold. Well, I think Ethereum is having its 2017 moment now, because now is the time that Wall Street will take tokenization seriously, and it's taking place on Ethereum. So I do think it is the biggest macro trade for the next decade.
How do you mitigate the risk in Ethereum that a lot of people see? I mean, the SEC could still classify it as a security.
Yes. Well, these risks that you describe seem like smaller risks compared to the fragility of the existing financial system, right? So let's say, what is the financial system's value in the US, in the real world today? Well, the GDP is 80 trillion and the financial system is 80 trillion. And that runs on plumbing that, if you're raising risks, are far more fragile. We are using trust vectors that are, in some cases, arcane systems, transfer agents that, rubber stamp things. I mean, look at the level of fraudulent activity on a traditional financial system ledger. JP Morgan, who I think is leading in terms of security for its customers and trying to do fraud prevention, still about 7% of their activity is suspicious. So you can't prevent infiltration. So is Ethereum superior to that? Yeah. I mean, so if you're comparing it to Bitcoin, we're comparing the wrong analog, is my opinion.
So if you had to put all your money into one, though, over the next 10 years, would you choose Bitcoin or Ethereum?
Now, why are we making that a choice?
I'm just curious. If you could just only choose one.
If I had to choose, because I'm chairman of BitMine, which is an Ethereum treasury, then I, of course, would choose Ethereum. You may have listeners that are kind of curious about Bitcoin, but, they have to also appreciate that every generation, like we're talking about Generation Alpha now, they are native. They're born native, and they're also going to be born in a world of AI. And so this idea of like physical money and only physical things represent value is not going to exist. So I think that's why Bitcoin's future, the best years are still ahead. For crypto, Bitcoin, obviously, and Ethereum. Not everyone will agree on Ethereum, but because we have another generation of people and decision makers that are really growing up as in a world of where AI is prevalent in their lives, and then really a token economy. So I think the best years are still ahead.
A new report from Cointelegraph is shining a light on one of the most overlooked stories in crypto right now, the silent demand shock building in Bitcoin. Over-the-counter desks, the preferred channels for institutions and corporate treasuries to buy BTC without moving markets, are running dry. OTC balances have fallen to just 155,000 Bitcoin, one of the lowest levels ever. Companies like MicroStrategy and Bitcoin ETFs have already absorbed billions this year, yet prices remain steady around $115,000 to $120,000. That's because OTC buying happens off-market. But with reserves thinning, future accumulation will increasingly spill into public exchanges, setting the stage for a major supply crunch. The timing couldn't be more important. If the Federal Reserve begins cutting rates in September, as analysts like Tom Lee expect, it could unleash fresh liquidity into markets. With limited sellers and shrinking supply, even modest new demand could trigger a vertical rally. Historically, Bitcoin's biggest gains have come from these exact conditions: strong demand, tight supply, and a catalyst. Tom Lee's prediction of $200,000 to $250,000 by year-end lines up almost perfectly with this scenario. The market hasn't priced it in yet, but when the dam breaks, the move may be faster than most expect.